Okay, everybody. Fantastic. So everyone should be able to see the screen now, and you should be able to see the pop-up smart money systems. Fantastic. Okay, excellent. Well, to kickstart things, thank you everyone for your patience. We just wanted to make sure everyone was going to get in, and we had no man or woman left behind. Today's presentation comes on a very special occasion for the stock market. We have a historic event today that has never happened before. Does anyone know what that is? And I'm not talking about impeachment, no. No, in terms of the stock market, although that might relate to the concerns, but certainly no, in the stock market as of today, we have just reached the longest bull run in history of the stock market. So that's a historic event. Also, what has happened is we have seen the the most overextended valuations that we have ever seen in the history of the stock market as well. So in terms of P to E ratios, we have never been at such overextended levels as we currently are today in the last 100 years. So it is certainly, this event comes at a right time where we start to think, well, what's going to happen next? So tonight we're going to be breaking down what's going on in the market. We're going to be looking at the charts, we're going to be looking at the technicals, and we're going to be talking about how we can use this current environment to really search out and scour for the best possible trading scenarios. What do we do with our money when all of this stuff is going on, and what could happen next? Obviously, we're going to be talking about the live markets. So quick disclaimer, this is not for recommendation purposes. Acorn Wealth Corp is not a registered financial advisor in any jurisdiction or province. So please take that into consideration, that obviously trading stocks and options does involve risk. You can lose all the capital that you invest. And some of the stocks and securities discussed this evening are being held by both myself as well as the Acorn corporate trading account. Okay, so we're going to get right in, and I'd like to kind of cut through the slide decks as yeah. So as much as we're going to go through some of these kind of theoretical points, really the purpose of this evening is to, as quickly as possible, drive towards a very practical session where you can feel free to ask questions and talk about maybe some specific stocks that you might be interested in. So yeah, so let's jump over to looking at what's going on right now. The market is at a scary high. The talking heads have been calling this for quite a while. I mean, these guys were people that called the market top back in 2007, 2008. Tom Forrester, was the only long-only fund in 2008 that made money, and basically he said the last two crashes were sparked by one industry's failure: tech in 2000, housing in 2008. Now we are at 9 out of 10 of the sectors are more expensive than their 10-year average. So not just one sector, but 9 out of 10. You've got blokes like Jim Rogers, who also shorted months before the 08 crash. He feels that we are in a massive bubble, and that we're going to see a crash bigger than what we've seen in the last 74 years. And why is that possible? Well, as Mark Faber points out, one, this market is not necessarily a representation of value growth. It is a situation where stocks have been so speculated, so greatly speculated on, that us as traders, enjoying this party of cheap money, have just kept betting and betting and betting, and the system goes higher and higher and higher, and everyone's been having a great party. But the hangover may hit soon. Basically, if you look at the amount of money being borrowed to speculate in the stock market and buy equities, it is more money being borrowed since 1950. So if you think about the credit collapse of 2008, where so much money was being borrowed for investment purposes, well, we are well beyond that level. We are at worse levels, depending on which way you favor, better levels, worse levels. We are at greater levels than we've been since the 1950s in terms of the amount of money being borrowed to go and speculate in the markets. And if you look at the amount of insider selling versus buying, you'll see that they're in terms of the people that run the economies of the Fortune 500s and things like that, and of our global economic community, they're selling. So from an investment long-term perspective, you can see there's a lot more selling that's happening compared to buying. So yes, I mean, if you look at Harry, you mentioned the bubble in Bitcoin. We could talk about any bubble. If you think about Bitcoin, I mean, I had students calling me when it was $18,000 saying, I'm loading up on Bitcoin. I said, why would you do that? They said, well, it can't go down because John McAfee, he's going to cut off one of his appendages if it doesn't go to 100,000. This thing can't go down. That's a very scary terminology, and the market has been now at this point in the longest bull run in history. And imagine if I said to you, look, I'm stretching an elastic band right now further than it's ever been stretched before. Would you like to bet that I can stretch it further? Would you bet your money on that? Or would you say maybe it's probably reached an extreme or close to? Think about it in logical terms. So, and that's where we're at. If you, again, coming back to my earlier comment, if you look at price to earnings ratios, we're at levels we've never been before. So this isn't an argument about value. This isn't an argument about whether companies aren't doing great business. This isn't an argument about whether the economy is growing or not. It's an argument of whether we have reached artificial levels in price of what companies are valued at in the stock market due to a hell of a lot of stimulated buying from cheap money, from great technicals, from artificial, kind of manipulation, and so forth. And yes, there is a lot of cash around, but when do we reach a point where the amount of opportunity to the upside is outweighed by the opportunity to the downside, right? Think of it in reverse. Think of it, because it's easy to think from a buy perspective. Most people think buy low, sell high. But flip it upside down. Try and reverse your psychology. Let's say there's a whole bunch of companies that you really believe in, that you fundamentally think are fantastic, and the market's been in the longest decline in history, and some of these stocks are starting to bottom. Do you start to buy them? Do you say, yes, well, it's been the longest decline in history as of today. How much longer can it last? Do I start looking for really valuable longs that I really believe in and start buying those? Isn't that the right attitude? Isn't that what you would do if we'd been such as in 2008, getting to those lows. That's how millions were made. So we also have to think in the reverse, that if we've had the longest bull run, that now isn't it maybe time that we start to look at those really, really weak stocks, that maybe it's time that they start topping. That's the mentality that I'm suggesting tonight. You know, we've got all of these factors that are basically lining up where we might not necessarily be crashing tomorrow, but we're certainly getting very long in the tooth in the bull market. And what that means is if we are at dangerous highs, and we're starting to get into these toppy situations where there's many catalysts now for potential downturns. I mean, you've got obviously what's going on politically. Markets don't like uncertainty. If you take all the conjecture going on with the presidency and so forth out of it, and the legal issues going on, think about the trade war. I mean, you're dealing with, it's never really great long term for an economy when you get into these kind of back and forth, $200 billion of tariffs, 50 billion coming back at us, all that kind of stuff. You know, look, and I'm not saying it's going to be any number of those. It could be something completely different. But we're starting to get into very frothy, very scary areas where there are risks to the market. And if you think of the fact that this market's being driven on speculation, that the valuations on the stocks we're buying are at more multiples than ever before, it's a greed-driven market. And the moment you get something that scares the crap, excuse my language, but scares the stuffing out of investors, and people start to sell, the problem is that there's so much leverage, so much bubble sitting underneath, that as soon as that pin pops it, you get nasty drops. And you've got to be at least prepared for it. And what we're going to be talking about tonight is how I approach that. I'm going to go long. I was taking long positions all of last week. But I'm only going to go long the stocks that are the absolute best possible plays. And at the same time, so therefore, excuse me, I should say, let me retract for a second. I'm only going to go long the very, very, very best plays, because if the market does get into trouble, which is, I think, a matter of when, not if, but so when the market gets in trouble, the stocks I'm in still go up, even if the market goes down. So looking for the very, very, very best stocks. So they either hold their value or, better still go up. And at the same time, I want to start preparing for looking for where those weakest companies are that are already going to start dropping now or over the next few weeks and so forth. So firstly, what we're going to do is we're going to set the tone of where the market's at. So we'll flip over to the S&P 500. So one moment here. I was fooling around with my charts earlier, as I'm sure you can imagine. So I'm just going to bring it back to the charts. Okay. So what we're going to talk about now is we're going to talk about how we approach the current market conditions using a system instead of opinions. Because opinions are statistically wrong. I mean, 85% of investors or traders statistically lose money, which is a study done by, I think, JP Morgan. That's 85% of people with a trading account lose money. There was another expose done on experts, people on television, that talked about where they thought the economy or the stock market was going to go and what their favorite picks were. Statistically speaking, over 70% of the analysts' picks lost money, and almost 100% of economic theories were proven wrong. So you're basically if you're relying on what the public's going to tell you, or what common forms of advice will give you, you are fighting a very dangerous upward battle. So what I like to look at is well, what data has a proven track record of being correct? What things do we have to look at that are leading indicators that can tell us what's potentially going to happen next? Now, one of the best things to then implement, of course, are systems. Now, we're going to come back to this chart in a moment, but systems are really important because they give us the ability to remove emotion as much as possible so that we have something that tells us whether we should buy or sell or possibly do nothing. With a lack of a system, we are left to emotions, which is the worst thing. And that's why most people fail in the market, because they get stuck. They're like a deer in the headlights. Now, this can result in not selling when they should and putting their head in the sand. This can also mean they don't buy when they should, because they're emotionally waiting to feel, some form of guarantee before they get in, and then buy too late. Or just as bad, they could simply sell because they're scared, have an emotional response instead of selling because the rules tell them to, or buy because they feel greedy instead of because of the rules telling them to. All of these things have nothing to do with strategy. Anything that's emotionally driven is not going to make you money long term. You're just as bad as the guy at the roulette table putting all of his money down on, black 18 or whatever the thing might be because he feels lucky. You have to have rules. You have to have confidence in them. So no matter which way you get your ideas from, no matter where you get your stimulus from in terms of stocks or options or companies you might like or companies you might not like, regardless, whatever the idea is, you have to have a system of how you quantify that idea and say, yes, this is something that checks all the boxes. And you have to know what those boxes are, because you have confidence that if all those boxes are checked, you have a high probability that that's exactly what you're looking for, that it's the highest probability of success, right? I mean, I've had TV going on in the background for the last few days in my hotel room here, and this, what's it called, the perfect match, or these kind of matchmaker ads keep coming on television. And one came on TV the other night and it was talking about how they had the perfect system for finding your perfect match. Now, everyone seems to be meeting online these days, right? And so on this comes this ad, and they said, look, we have the better mousetrap. We have the better system because we have 47 different criteria that we match you on, so that it is a purely a true connection that is matched to you the best. And I couldn't help but think about stocks. I'm like, well, here's all these people that are paying all this money to make sure that they're matched up with the right fit, that it's not just, blonde hair, 5 foot tall with blue eyes that likes football, female or male, that whatever the case might be, you know what I mean? It's not just that, it's more important than that. And I reflected on how most people look for stocks, how most people look for matches for their money. Matches for their money that you might have worked years and years and years and years and years for, things you've given up holidays to save money for, things that you've given up or sacrificed certain things to have an extra few zeros in your bank account. If you're going to give that up and you're going to say, I'm going to put that money into this opportunity, shouldn't it be a perfect match? So how many criteria are in your checklist when you go searching for an investment? Do you know what they are? Or are you just dating any opportunity that comes your way? You see what I mean? We have to be picky, especially when it comes to your money. And the job of the market is to help you to do the opposite. The job in the market is to detract you from what you're really looking for and create emotional responses, either through fear or greed. So this is why systems are so important because the stock market is not there to help you. The CEOs of the Fortune 500 companies are not there to help you. You know, there is a reason why when you call into these companies, you wait 15 to 50 minutes on hold, because the reason the job of corporations is to make money. The smart money has a different agenda. They are there to look after themselves. And the very last person that's going to tell you, you know, that it's time to sell is the CEO trying to offload his million shares to someone just like you to buy them. So why would smart money ever give you a warning? The smart money is always well ahead of the curve. They know the news 3 months before we will. They know they're going to act on information most likely well before it's public. Whether that's legal or not is another question, but it happens all the time. So what I'm getting at, to cut to the chase, is that in a market so full of manipulation, corruption, you name it, if you're relying on the same tools that every other person out there is using, you know, moving average cross or reading the newspaper or looking at quarterly reports, trying to analyze fundamentals, listening to analysts, you know, at the end of the day, you are doing what everyone else out there is doing. And if 85% of people are doing it badly, then how are you going to make money competing with all of those people? So a long time ago, I stopped believing that I could outsmart the experts. I realized that there's a lot of people much smarter than me that have much deeper pockets and much better resources. So why try and compete with them? Especially when they're the big boys in the room and girls. And if they get behind something, whether it's good or not, it's going to go up. Or if they get against something, like it or not, it's going to go down. So I thought, well, why compete with these people? Why try and outsmart them? Why am I going to spend hours and hours and hours in front of a screen researching, trying to find the next Apple, or the next, the next big pharmaceutical explosion, or the next whatever, when all of that research is already being done for me? And that's the point. That is the much easier way that I'm getting at. If all of this research is being done for you, why do it yourself? Are you really going to argue with the CEO of Goldman Sachs and where the money's going? Are you really going, if a CEO of some tech company, as well as his chairman of the board and all these other people, start selling all of their stock, are you really going to say, you know what, I disagree. I don't think they should be selling their stock. I think that company is going places. So all that stock they're selling, I'm going to buy as much of it as possible off those insiders. Would anyone in this room do that? Please raise your hand if you would. Would anyone in this room start buying stock off the insiders if they're selling it? So if I, I was approached by a couple of companies recently to invest in their private venture. They said, John, we'd love you to invest in our company. We've got some wonderful things going on, and we're looking to raise some capital. Would you like to invest? You know what the first question I asked was? How much money are you putting in? I mean, that's the fundamental thing. Where's the skin in the game, right? Follow the money. That's the simple way. If you ever want to know what the real truth of a situation is, which is what you want to know if you're putting your money at stake, follow the money. So let's start to look at systems on how we can do that. So first, let's jump into where and how we do this, or how we follow this approach in terms of the market. So the two critical decisions we need to ask ourselves are, one, which direction is the market likely to go? I mean, that's obviously a fairly critical part of our investment perspective. Secondly, once we know where probability is indicating, how do we find the highest probability stocks or option setups with the best risk reward that we can take. Okay. Now, the way we're going to do that is we're going to first start with the pattern. So why is the pattern so important? Why is the pattern indicative of smart money? Well, what makes something go up or down? Volume. So if volume makes something go up or down, ask yourself, who controls the volume? The smart money does. Smart money controls the volume. 80 to 90% on a given day of all of the volume comes from algorithmic buying and selling, or otherwise known as high-frequency trading. How do these traders make decisions? Based on rules. These rules are what we call, in the stock market, patterns. Now, by understanding the patterns, we're able to understand where the smart money is going next, because patterns are one of the very, very few leading indicators. Patterns tell us by what shape the stock is making, what the high probability is of where it will go next. This therefore tells us where we buy, it tells us where we get out, whether we raise our stop or we simply sell. All of these trading decisions that are critical to making money, where your stop loss is, where you're proven wrong, all these things. These are all determined by the pattern. So if we look at the pattern first of the stock market, what you'll see is that we had a major breakdown in the S&P 500 in January. Sorry, let me just get some of these extra lines off. You can see we had a major breakdown in the market, obviously in January. 25th was the high, 26th, sorry, and we then had about a 12% drop. Now, the pattern there formed a rising wedge. That rising wedge, you simply measure from the top to the bottom. Right, we measure that distance, and that tells you that we should be breaking down by that amount. As you can see, that's exactly how much we broke down by. Not close to, but exactly. We then form an upward channel. Now, an upward channel is bearish. So, statistically speaking, upward channels should break down. So again, when we're trading a stock, we're not trying to look at what's happening now. We're looking at what's going to happen next. So when I see an upward channel, I'm not buying the dips. What I'm waiting for is I'm waiting to short the tops once it gets long in the tooth, or better still, short when it breaks below support. So instead of reacting to the market, you're anticipating what's next. Much, much easier, much more profitable. So what do you see happening here? Well, we have an upward channel. And as of the last 2-3 days, you'll notice that we're also right at a double top. Can everyone see that? So you've got an upward channel that's bearish. You've got a double top that's bearish. That all indicate that probability-wise we should go down. Now, there is one bullish argument. There is one bullish argument that, in fact, we actually break higher here. But as bullish as that might sound, that's actually one of the most bearish patterns you can possibly get. When you have an upward channel that breaks to the upside, that is one of the most bearish momentum patterns that is now building. Just like if you had a downward channel that broke to the downside, that is one of the highest probability momentum bullish patterns you can get. So the scenario we're in right now with the market is one of two things. We either break down now, and now is the time to be shorting, looking for really, really good shorts. That's option one. Option two is we break higher than this resistance, okay? And we get probably about anywhere from 5 to 6 weeks, maximum of 2 months of really good bullish activity. And then this whole thing comes collapsing down in a really powerful downward movement. So no matter what way you look at it, from the rules of any technical analysis you could look at, we're within 2 months, very close to 2 months of a big downward move. Either that's immediate or it's about 2 months off. So with that being said, what kind of plays should we be looking for? How do we navigate that kind of a market, right? Well, it doesn't mean we stop trading. It doesn't mean we just kind of run for the hills and say, I don't know what's going on, I'm just going to get out of here. That's an emotional reaction, and we don't want to do that. If you're in the market to make money, which I'm sure all of you are, it's not just for fun. If you intend to enhance your financial position by trading stocks, whether it's for income or capital growth or just working from home, then what you're waiting for is these kinds of opportunities. We're at the again, we're at these critical resistance points at the end of the longest bull run we've ever had in history, at levels where companies are more overpriced than they've ever been from a multiple standpoint, where more money, more unsecured debt is being borrowed to pump this market up than ever before, where we have a trade war going on and a president, love him or hate him, that's being threatened to be impeached. You want to pick a turbulent time, you got it. So these are the kinds of opportunities that you beg for as a trader. This is a huge opportunity to make money in both directions. But this is why you have to put away, your average kind of buyer inverted head and shoulder, or, you like a company because you like the fundamentals and the management, or you buy that, or you short the ones that are breaking down from support because the moving average is crossed. Yeah, okay, fine. Pick up any Investors for Dummies book and you can learn that. Now is not the time for the ABCs of trading. Now is the time where you really, really sharpen your axe and you need an edge. Everyone's got to read those books. Everyone's been there. Maybe some of you are right now. I spoke to a couple of you earlier today that are in your first 6 months of trading. But now is when you need to sharpen it, because if your business, or if your intended business is the stock market and making money at it, then you are in perhaps a once a decade, or even worse, or even better, a once in a lifetime opportunity in terms of market conditions and the perfect storm. So this is what I want to point out. So I really don't care from a trading perspective which way the market goes, because what I'm looking for is the highest probability plays where we can make money, and the way we do that is by simply following where that money is going, from a perspective of the pattern that we've just talked about, and from a perspective of where the smart money is going. So regardless of what's going on, I want to start looking for if I'm afraid of the market going down, but I realize it could still go higher, then I want to start hedging myself with the very, very best possible longs, and at the same time also starting to hedge in shorting or buying puts or whatever the case might be, depending on what kind of account you have, in the very best shorts. Now, right now, I'm 98% long. I'm very, very long. Okay. And I will continue to be until we get the technical signal that the market has turned. And the moment that happens, I've got my list prepared of stocks I want to jump into on the short side. So how do we build that list? What kind of trades should we be looking for? How do we go into these kinds of markets to pick these little diamonds in the rough? Well, the way we do that is we start to look for those two things. Very high probability patterns, so we know the high frequency trading is going in our favor, that's where they're driving the stock with 80% of the volume in the market that day. And secondly, I want to enhance the probability of those technicals by seeing that the smart money, the insiders, are loading up as well. Makes sense, right? I mean, let me put the question to you, because we're going to cut out of the slide deck here now and start looking at some actual positions I'm holding right now and some other ones we're looking at, so you can see what my what our approach is here that we're suggesting. But let me ask you first, out of everyone here in the room, if I said, tell me what is the perfect long, right? If I said, look, I'm the biggest supercomputer you could ever possibly imagine. So you simply tell me what kind of stock exactly would you need to see for you to pull out a fifth of your trading account? What would that look like? How many people know the You know what? I realize I can't pace around my room. The microphone cable just won't work. I get excited and I start pacing back and forth, and that happens. Anyway, so what the first one was rising. Okay, breakout of a long base with volume, rising price, rising volume, lowering volatility. Yep, so a momentum trade. But what else? Is that enough? Again, I'm coming back to the question of that perfect match. Okay, so it's rising price and rising volume with lowering volatility, but what kind of pattern? Are we talking? Is it an oscillating stock? Is it a momentum stock? What are the fundamentals doing? Is it what kind of industry is it in? Do you have a requirement on P/E ratios? Does it pay dividends? Is the candles expanding in range or contracting in range? Do you rely on a 9 and 20-day moving average system or a 50 and 100? What does the ADX need to be? There are so many variables you can plug in. And my point is, it's great to have a starting point, but why not get really specific? Because if it's just general, it's too easy to go down the wrong path. If it's just general, you're dealing with a fire hose of opportunities when really you want to narrow that down to a garden hose trickle. And the saying that I always like to put out there is, if you don't know where you're going, any road will take you there. So I like to get really, really specific about what I'm looking for. What I'm looking for is, I want to find a stock that has, firstly, the strongest technical pattern. So I've been doing this for 16 years. My first job when I was 18 was, I worked in a video store. It was just for fun, actually. I spent more money traveling on the train to this store and back, an hour each way, from the Gold Coast to Brisbane in Australia. It cost me $20, $25 to get there and back each day, and I made $5 an hour for 4-hour shifts. So I spent money to work there, if you can imagine that. But I loved movies. That was my first job. My second job, when I was 18 and a half, was I started working in the stock market. I've done nothing since. This is my passion. Um, and when I start to think about what the perfect thing looks like, what I really want to see is the technicals really being strong. So when I started my career, I observed that there was over 100 different technical patterns that the high frequency traders use. Obviously, we don't want to learn 100 patterns. No one can be perfect at 100 patterns. So for the first 5 years of my career, I studied these intensely to figure out of these 100, which were the highest probability. Now, that's not the most important thing. How many wins versus losses isn't necessarily the most important thing. It's also a combination of probability, profitability. So how often do you win versus you lose? How much do you make when you win versus how much do you lose? And then predictability. The 3 Ps, I used to call this. What pattern is the most probable, that has the best risk reward, that I can consistently find? Probability, profitability, predictability. Can you find it? And once we found that, we started developing methods to scan for specifically that pattern. So we did that. That was when Acorn launched in November 2007. And so for the first 5 years, well, that's all we taught. That's all we taught was a few key patterns that I'd previously spent 7 years developing systems to find. And that was how we built all of our success. But then came the next frustration. The next frustration came from where I started watching these patterns. One specifically that I traded a lot, called a fallen angel. And I watched it go up 8 to 12%, which was my magic number to sell at. My magic number was to find a stock that was going to go up 8 to 12% over 3 weeks. And I get in, I get out, and then go somewhere else to find and do it again. Fantastic. We built a beautiful little business on it, did well in trading. My frustration came when I started seeing these stocks that we'd go back and look at 6 months later, because a customer would tell us, "Hey, John, remember that stock you picked out? I never sold it, and it's up 1,200% now. Thanks very much." I was super happy for him, but you're kicking yourself under the table at the same time. And when more and more of these occurred, I started thinking, why are we leaving all this money on the table? I've spent all this money and time developing these systems to find these stocks, to know what these patterns are. 5 years of my life losing money, because I'll tell you that straight up, I lost hundreds of thousands of dollars before I started making money. So I've gone through all this, and why are we leaving all this money on the table? So my next job, if you care, giving you my life story here, but maybe it's helping you if you're going through this process yourself. My next challenge was, how do I figure out how to not leave so much money on the table? Why am I selling stocks for a 12% profit that are going up for the next 6 months and reaching high triple digits? So the next process was to look at what were the differences between these huge runs and the ones that only went up 12%. And this is where in the last 5 years, Acorn really started to grow into understanding the importance of insiders and smart money, because the ones that really, really ran had these characteristics as well as the pattern. So let me show you what that looks like. We'll start with this one, TRXC. Now, full disclosure, I still hold a position in this stock, but TRXC was one we picked out in August of last year. And the qualities we're looking for is, one, a very high probability pattern, and then two, the insiders. So the smart money in our favor because of the algorithms wanting it to go up because that's what the pattern says. And two, that there's a long-term, really rosy picture potentially because the insiders have a lot of unusual buying activity. So when we looked at TRXC, let's look at the chart first. Okay, here we go. So when we looked at TRXC, and we're going to have to go back a little bit, this stock from November 2016 all the way down through June 2017, can everybody see that this was in that exact pattern I talked about before? A downward channel that broke the wrong way. Just like what we're talking about, the upside down version on the S&P. Yeah? Okay, awesome. So when you get a downward channel that breaks downward instead of up, this is called a fallen angel. This is actually the pattern that I built, I would have to say, all of our success on. This is the key pattern we've taught for the last 11 years. So when you get that break to the downside, and you get that nice little scoop, and then you get the ski jump, I call it, that is go time. Okay, so that was the first thing. Very high probability pattern, the highest that I know of. Secondly, you see this green line down the bottom? This is like a version of Chaikin money flow, but on steroids. It was actually the idea for this indicator came from Chaikin money flow and was actually designed by a gentleman called Colin Twiggs. And it is the, as you might see, outside of moving averages, it is the only indicator I need on my chart. I used to have everything: Ichimoku, Keltner channels, Bollinger Bands, RSI, MACD, all that stuff. This is all I need now because this tells me one important thing is the smart money buying from an algorithmic sense. So if you like to see that a stock is making higher highs, if you like to see that volume is increasing while that's happening, if you like to see that the candles are increasing in range, and if you like to see that the stock is closing higher in the range each day or consistently high in the range each day, and all of these things you should want to see because those are the characteristics of a true upward trend, right? Going up, making higher highs, doing it with higher volume, expanding in range, and closing at the top of the range. All of that needs to happen if you really have accumulation. Okay, so this indicator, as well as looking at the average true range, it's an awesome indicator, looks at all of those things and says, right, if all of that stuff is happening, that can only be happening if the 80% of the volume in the market is buying and holding. So if this indicator is going up, that is a great, great, great sign, especially if this indicator is going up while this stock is going down, because now you have an edge where the smart money's loading up while everyone else, the retail traders, are selling off into that. And the smart money loves that. So this is the perfect pattern. This is the perfect indicator. So when you have both happening, we now get really excited. Now we say, okay, what are the insiders doing? So we're going to jump over to a site that I like to use for some of this research called openinsider.com. And I'm just going to punch in just to show you what was going on with this stock, TRXC. Actually, I've already got it on this. I'll go back to that site in a second. I've already got a screenshot. This is the screenshot from that site. Have a look at this. As that was happening, you can see that the insiders were purchasing $5.2 million from a 10% owner, increasing their position by 24%. Another insider transaction, 278% increase. Another insider transaction, 208% increase. Another one at 150. Now, don't worry that it's only 50 grand, because not every director of a company is a millionaire, especially in stocks that are trying to create the next Amazon, the next, Bristol Myers and Squibb, all those kinds of things. This could be a big chunk, and the fact that it's a big chunk is represented by the fact they're tripling or doubling their position. So we said, yeah, let's do it. And so we jumped into this and bought it, and the thing went all the way to $4.80. And because this was actually a level where we had historically had a sharp sell-off at, that was our preset price to sell. So we preset where we were going to buy when the market was closed. We said buy if this price is hit. We preset sell if the price goes up to here. And because we actually, surprise, surprise, put our money where our mouth is, we bought it. And I put, I think it was about 20 grand in, or maybe it was 15 grand, something like that. And as you can see, it hit $4.40, sold 11.5 grand at 440, 12.5 grand at 418, and another 11.5 grand at 438. So 3 different sells that had occurred at that target price. We sent a text message out to our students alerting them. Little screenshot from my cell phone there. Yeehaw, sold at 440, looking to get back in after we pull back to support. And that's exactly what I did. This is a screenshot from my brokerage from about a week ago. Haven't updated it yet, but so when after it pulled back to support, we got back in. We used all the money we made on the first trade and put $42,000 back in at $3.74. When I took the screenshot, it was at $5.14. So we've already picked up another $17,000 purely following the pattern and the smart money. So it closed at 506 today, so it's a little bit less than that. But if you look right now, you can see that what's actually forming, for those of you who understand patterns, is a pennant formation. So this could easily be $8 next week. So there's an example. So this is the kind of trade I want to be in this kind of market, because no matter what the market does, these kinds of stocks have a life of their own. This looks nothing like the stock market, and that is a good test. If someone tells you to buy a stock or short a stock, make sure it looks absolutely nothing like the stock market, because the stock market right now is full of you-know-what, full of stuffing. Look for the stocks that have their own heartbeat, their perfect pattern, the perfect insider indicator, the perfect insider buying, because something else is going on that regardless of what the market does, these things are living, right? Let's have a look at this one. KALV, very similar situation. Let's go to the chart first. So yes, I still hold a position in KALV, excuse me, TRXC, by the way, for full disclosure. KALV, I also still hold a position in, full disclosure. I bought this at 10.05. Have a look again. Beautiful downward channel. Beautiful downward channel. Downward channel, as we talked about before, is bullish. So rather than buying when it's inside the channel, because maybe it breaks to the downside and becomes a fallen angel, rather than buying inside, I wait for it to break out. I bought it at 10.05 when it broke through both the channel and that horizontal resistance, and jumped in. Have a look at the smart money indicator. As the stock was basically going sideways, the smart money indicator shot straight up and broke through zero for the first time since, months and months and months ago. So loaded up on that one. Put 23,000 into that. I'm still holding it at $10. When I took this screenshot, the close price was 11.27. But obviously that's up a lot higher now. I probably should update this. But I want you to know that this isn't just stuff that we make up and say, hey, let's come up with a really cool strategy we think we can sell in a webinar. This is stuff that I put hundreds of thousands of dollars of my own money behind. So what I'm teaching you right now, what I'm telling you I think you should do, the strategy I think you should follow is exactly what I'm doing myself. And so, yeah, so here you go. Here's an updated. That's as of the close last night. So yeah, 23 grand in. Current value of 44,000. So a $20,000 profit, or 84% as of the close last night. That's straight from my personal brokerage account. Right? But why? Well, again, one second here. Just got to close my brokerage account off. But why? Let's go once more to the insiders. Have a look at what was happening with KALV when I bought it. Director, 10%. Increases position by 144%, 7.2 million. Other director, 144%, 7.2 million. $8, $8.61, 153%, 4.8 million. Do you think they know something? People might sell for a number of reasons, but they only buy for one, that they are greedy. They believe they can make a whole bunch of money. It's not just a 10% move. It's not just a 20% move. When they're putting that kind of capital in, and the fact that they're doing it, let's go back 4 years, right? This is the first time that we've ever seen those kind of percentages, and it was the first time in 3 years that we'd seen buying. So this was the real deal, right? So in we go, and that's had a fantastic run. What else? VSI. These are all stocks I hold. So I'm not just cherry picking. I'm actually talking about the ones we have put our own money into. VSI. Have a look. Do you spot a certain pattern, ladies and gentlemen? Can everybody see what's going on here? Does everybody see that same pattern that I'm talking about? Testing, 1, 2, 3. Yes, yeah, okay, good. You're all alive? So I just want to make sure that I'm not making this too technical. and that it's all making sense. Again, perfect pattern. The break below the channel, the beautiful accumulation, that little bubble, the ski jump beneath, and look what happened. Again, look at the smart money indicator. Oh, by the way, and I do see your questions about the smart money indicator and what platforms you can get it in. I will answer that here shortly. Smart money going straight up as the stock was going further down, right? Absolutely beautiful. So once more, check it out. Look what was happening. Insider, 208%. Executive chairman of the board, 441%. And then you got the 10% owners, 2.2 million, 1.6, 2 million, 71 grand, 1.1 million, 628,000. You're dealing with basically an overall 50% increase with millions of dollars, triple digit increases from the board of directors. I mean, are you really going to argue with them? You might say, well, John, all you're looking at is technicals and insiders. But let me ask you, what else could I possibly consider? You might say fundamentals. Well, what about fundamentals? You could consider those. Well, I'm asking the executive chairman of the board, hey, Alex, do you think, hint, hint, nudge, nudge, this is a great time to buy your stock? And Alex says, well, I can't tell you, but I've just increased my position by 450%, John. I mean, is that a conversation you'd like to sit in on? There it is, right there in front of you. So if you want to know what the fundamentals are like, ask the chairman of the board what the fundamentals are going to be, because you can't read that online. And the way you do that is by watching what they're doing with their own money, 440% of it. And so again, I'm not just trying to get you excited. I am excited. I'm $22,000 excited that I put into that. And now it's at 14 bucks and still going. And does this look anything like the stock market? Absolutely not. Smart money indicator taking off, stock making brand new highs today. Insiders loading up. And this is what they end up looking like. This is one of our earlier ones, one we prepared earlier. Sound like a cooking network. But look at this. This pattern formed over 5 years. Sorry, 4 years. It was the same thing though. Look at this. Beautiful. Downward channel. Scoop beneath. Absolutely perfect. And then the stock just goes sideways, flat lines. And look at the smart money. Straight up. Now I'll zoom in because the scale is crazy. But when we found this at $3.33, I'm going to zoom into that now because again, the scale is crazy. We found this all the way back here. The smart money was going divergent once more. And when we look, actually, let me show you. Let me show you the chart because that's going to help you visualize this. Oh, hang on. I should know the website of my own login. One moment. Let me show you what this chart looked like when we alerted it. So I'm just going to log into our customer portal. One second. And going to go into our trading center, trading alerts. Okay. And TNDM, let me search for that. Okay, there you go. So trading alerts. So this was from February 27th. Again, you can see the first entry was $3.33. The second entry was $9.13. Stop loss is currently now up to $25. So that's been raised and raised and raised. And have a look. So you can see all of the notes that we've been publishing We update this kind of every couple of days, as we do with everything, every alert we send out. And but you can go down, you can click on the chart, and you can actually see the original chart of when we published the alert, which is really, really cool. And that's what it looked like, just to give you a bit of perspective. So what you can't really see on the other chart is that you also had this downward channel there as well. It was like, it was a slam dunk. Everything was perfect. And look at that huge volume as you break out of that long base. Whoever said that earlier? Break out of a long base with volume. And there it is. And you can see money flow was breaking above zero down the bottom, and it just took off from there. So once again, we're now at $40. That is over 1,000% return, and still going. I don't know if there's anything else worth showing you. I mean, there's tons really, but you probably get the point by now, I'm guessing. So, okay, I'll show you one more. GNMX. This is one that I just recently purchased. Again, I'll give you the proof of the pudding. So this is quite new, but same stuff nonetheless. There we go. There's a quick screenshot. GNMX, 14,000 units at $1.07, which I bought on the 17th of August, which was whatever that 19,000 price, close price of $1.20. That's a 10.7% increase over 5 days. So $2,100 over 5 days. How easy was it? Simply running the scan, looking for the pattern, and let me show it to you. There's a few kind of cool patterns going on here. Check it out. One, you've got the downward channel. It's a kind of a bit of a weirder one, but it's still valid. And actually, I bought this there and sold it here earlier this year. It's now been in another downward channel. And as you may be able to see, just breaking out right there. Right? Just breaking out. So I bought it at $1. It's at $1.20. So we've made about 10% on it so far. Look at the smart money indicator, skyrocketing. And have a look at the insiders. You can probably see that this is the same recipe again and again and again. So the 17th of August, just last week, the director increased his position by 165% with $2.5 million. And another director, the Children's Hospital of Philadelphia, bought $2.5 million as well. And then late last year, the president and CEO increased his position by 120%. The chief scientific officer, 189%. A brand new buyer, another director. I mean, what more could you ask for? What do you think the fundamentals look like? What do you think they could possibly know to all suddenly be buying like it's Christmas time and they got a stocking full of money? I mean, I don't mean to get over exaggerate, but it's like that. When you see all of the insiders rushing to double, triple with millions of dollars, isn't that the best expert you could possibly ask? Are you really going to go and look into the company and figure out what they do like you are some kind of pharmaceutical expert? Because I sure as hell am not. One, I don't have the time. Investing is about money working for you. If you're trying to become a pharmaceutical expert, sounds like a real pain in the backside. Are you, and even if you were good at pharmaceuticals, are you really going to second guess that kind of activity, it's worth the risk, I think, to say, hey, let's take a chance. And so far, this one's made money. The very last one I'll show you, I bought this just a few days ago. Actually, it's quite fresh. 2 days ago, I bought this on whatever the day is. What's the Thursday today? So I bought it on Tuesday. And that is this one, SSKN. Here we go, SSKN. Again, full disclosure, I still hold positions in all of these. There's SSKN. Bought this on the 24th. How's that possible? It's tomorrow. That's weird. Anyway, so yeah, bought it at 251. This isn't reporting correctly, maybe. Anyway, let me just check this. 251. I might need to call my broker. SSKN. SSKN. Yeah, okay. It is correct. So anyway, so this one, but you take a look at this one. This one looks really good as well. SSKN, bought it at 251. I guess it just hasn't updated. But have a look at that one. Absolutely beautiful. Right? Look at the chart. Look at the pattern. Go to the logarithmic. There you go. Look at that. Beautiful downward channel. Perfectly breaking out. Look at the smart money. Skyrocketing. Breaking through zero long before the stock even broke out of the resistance zone. Right? And now take a look at the smart money. Hang on. So I've got to take my brokerage statement off the screen. Just switch windows. There we go. So it was SSKN. Check it out. So in the last couple of months, look at all of that brand new buying. Absolutely brand new. You got 1, 2, 3, 4, 5 different directors all of a sudden for the first time in their history saying, ladies and gentlemen, now's the time we all buy. All at the same similar time. Sorry, the last one is old. Everything else is new. How do I determine my exit? The pattern. So a downward channel, the rule is to measure the top to the bottom, as you can see there. Wait for the breakout. Our entry signal was actually 216, so I bought it late, and I'm almost 100% sure I didn't get into it that late, because what was the high on Tuesday? 237. Yeah. So there must be an error there on their end. So I got it. I put a market order in on Tuesday morning, and anyway, so I got it a bit late. 216 was actually the entry signal we published to our students, and as you can see, this is just skyrocketed ever since, and the volume has been moving up really, really nicely. So right now we look at an entry on the break of that resistance, which it did, and the target is a rally to the extension of this target. Now, because there's such a heavy level of selling and on these two candles, we've set two targets. And the first target, I believe, is 483. But from 216 to 483, that's already over 100%. And certainly by then, you could be at the position where you've updated your stop loss considerably. Anyway, so look, I don't need to probably belabor the point. This is these are the kind of stocks that you want to follow. These are the kinds of stocks I believe are the best ones to be looking for. Can I show you a failed trade? Yeah, sure. This is one I'm actually still in. I'm down 12% on this one. It's TEUM. So it's not failed. I'm just not making any money on it yet. TEUM, you can see, is a pennant formation. So I bought it after it was breaking out. As you can see, the smart money was breaking out too. The money flow was down. So I don't know if this has failed yet or not, because it really hasn't stopped me out. I'm still holding this position. It's just kind of bouncing along support. And again, if we have a look at, sorry, let me take my brokerage account off again. TEUM, I forget what the insiders were like on this one, but yeah, as you can see, look at that. Really big insider buying, just a little bit older than what the previous one was, or ones were. Nevertheless, still liking it. Still holding it, just hasn't worked out yet. Another loser, General Electric. I bought General Electric at, trying to remember now. Oh, I've got it marked on my chart. Yeah, I bought General Electric at $18.64. Same reason I bought the other ones for. Downward channel, nice swoop beneath. It just didn't make it. But as you can see, I mean, there's not that same divergence in the money flow. It wasn't as strong there. But other than that, it still looked okay. And if you were to ask me, what did I do wrong with General Electric, or what would I do differently about it if I was presented the exact same trade again? The answer would be absolutely nothing. I would do that same trade every day of the week. It just doesn't work every day of the week. I mean, and that's the key thing about having a system. If you don't have a system, every time you lose money or the trade doesn't work, you're going to wonder what you did wrong. What should you do differently? Should you had a tighter stop loss? Should you have looked at a different pattern? Should you have listened to Stock Twits and what Kramer was saying on the Ding Dong TV show? Or did you do absolutely everything perfectly and it was just one of those 20% of the times that it didn't work? Unless you have a system with complete confidence in the rules, you are going to constantly screw yourself up. And let me fast forward, because I know we're actually going over time now. So let me fast forward actually to the slide that says exactly that. If you rely on emotions and you rely on trying to be the Einstein every day, recreating the wheel, one, I don't think you're using your time properly or as efficiently. I mean, unless you really, really enjoy staring at the screen all day, you don't need to be. I thought trading was about making money work for you. Now, whether that means you go and travel around the world all year, or whether that means you sit in your backyard and crack a Budweiser and watch the football, whatever you like to do. Money is about freeing your time, which is the most valuable asset. And to me, wealth is not about the amount of zeros in your bank account. Wealth is how can you create money? Can you create enough money every day so that you can do what you want when you want? So let's say you got a guy with 100 grand in his bank account that has the ability to make $10,000 every month. Well, that guy is rich. But I know some people I've talked to in the years that had $800,000 in an IRA that were 55 years old that still couldn't even envision being retired because they're like, well, that'll be gone in X amount of years, and then what the hell will we do? You know, wealth is not about the money in your bank account. It's can you create money efficiently? Can you create it effectively? Can you create it consistently? Um, and so if you don't have a system, you don't have consistency. You don't have the ability to do this. Um, you won't have replicatable methods of getting in and out. So I would suggest that once you do, now you're on track to being able to have consistent results, a system of control of making money. And this is where you start to really get to that idea of freedom, dare I say the word, because you can choose what you want to spend your time on more. And all of tonight, I think that's the main thing I want you to take away from it is that you want to have systems, you want to have scans, so you're not wasting time, you're not wasting opportunities. And look, and that is exactly what we provide. I mean, Acorn teaches these systems. We do things all the way from one-on-one mentoring through to teaching patterns, developing custom scans for people. But no matter what we do, everything is around the idea of a system where it's simple and most importantly, following where the smart money is going, getting to the root of the opportunity. Tonight, we're going to offer you something special. And that is we believe that obviously the market is in a very, very special situation. And because we're in a very, very special situation, you want to make sure you're sharpening your axe. You want to have an edge. If you're going to put money into something, you want it to be the very best opportunity you possibly can. One where you have the highest probability set up from a pattern perspective, where you've got all of this stuff going on that we've talked about, such as the insiders loading up, but not just loading up, but multiple insiders, triple digits, millions of dollars, with again at the perfect timing from a technical perspective. And obviously this is research we do every day. This is stuff I'm doing for myself, for our students, and for other parties that I consult with. So what we do is we publish a video twice a week with our favorite setups. It's usually about 8 to 10 minutes long, comes out in the evening after the market's closed, and that's where I do all my research. Once the market closes at 1 p.m. Pacific, I start researching. I run my scans, looking for when my favorite pattern, the fallen angel, is occurring at the same time as huge insider buying. There's a few other special things I put into it, which are kind of my secret sauce. And from that process, I find these, the ones I've been showing you tonight. What I then do is I make a video that says, this is what the market's patterns are doing. This is where the smart money is going. So we have a very high probability we're going to be going bullish for the next 3 weeks. And therefore, these are the two longs I'm looking to buy. This is the price I'm going to buy at if it goes above this price tomorrow. This is the stop loss I'm going to use. And this is the target I'm going to sell at. And all of those things are in the email, and all of those things are published before I even look at getting into them. So it's not like I'm buying stocks and talking about them later. Sometimes I might be fully invested and I'm not looking to buy anything else, but we'll still publish other ideas. Again, this isn't advice to go and buy it. It's up to you. It's not just ideas, but I'm telling you what I'm doing. So you'll get that delivered to your email twice a week for over the next 4 weeks with our favorite setups. Now, the other thing that you'll also receive on top of that is text message alerts. So any updates through the day, you will receive that as well, and also any kind of day trading opportunities we find. You'll also receive daily updates on all of the positions we send out over those videos. You'll receive access to the customer portal so you can log in and view all of the alerts just like I was showing you before. And you will also gain access to our smart money scanning package, which is essentially that indicator I was showing you before. So that indicator we have programmed into Think or Swim, Ninja Trader, TradeStation, Trading View. It's already in Incredible Charts, Metastock. I think I've hit them all. And if you don't have any of those programs, we can give you a free one, which it will work on for you. So you can check that out. On top of that, for the $97, you won't just receive that indicator, and that is the most important indicator technically that I use. That is, I would never trade anything without that indicator. Yes, TC2000, we have it for that. Yes, so the indicator is included. I promise you will love it. We have a video on how to use it. It is amazing. You can bring up any stock for me here if you want in a minute. We can show you what the indicator would have said, buy and sell signals. It is amazing because it basically encompasses everything you need to know about the technicals. On from that, we have a live session called Trading Room. Now, a lot of people say Trading Room, you think of a live chat room throughout the day where somebody's talking at you, talking about day trading ideas. You will never find me in front of a computer screen during the day. That is not why I wanted to learn to trade. Daytime is for enjoying. So all of the work we do is at nighttime, including our Trading Room. So at Tuesday and Thursday at 4 p.m. Pacific, this is when we get together as a group for an hour and we'll analyze the market, look at high yield bonds, we'll look at all these cool stuff, smart money indicators that you'll explore as you get to know us that are really, really cool. And we'll say, look, which way is the market going? Therefore, what kind of stocks should we be looking for to trade? And then we'll go and scan with you live and pick out our favorite stocks so you can actually see the entire process and investment decision-making process that I go through every day. We teach it in a live environment on those Tuesday and Thursday sessions, and we also open it up for Q&A for everybody to ask questions. So all of that's included for $97, and that will run over the next 4 weeks. So you will, and that's going to be very important over the next 4 weeks because we are going to break one way or the other. And what this will give you access to, of course, is the research we're doing. So these scans that I run are proprietary. They're things that I've developed over the last 16 years that they are my pride and joy. So that I run those scans each night. I look for those stocks and publish them out to you. And then the Tuesday, Thursday sessions, we go through the interpretation of the what, why, where, discuss the patterns, everything you need to know. So any questions on that? Interactive brokers? No, it's not. It doesn't work with interactive brokers. I use interactive. I have 2 brokerage accounts. One is with interactive brokers, and the other was with like more of an old-fashioned kind of a physical person broker. It doesn't work for either of those, but I don't need it to. Neither do you. Interactive brokers is just an execution platform. It's not great for charting, as probably you know. So what I do is I do my research charting wise on TradingView or Metastock or Incredible Charts. All 3 of them I use. They're all really good, and we have it programmed on all 3 of those. Any Canadian stocks? Yes, actually 50% of my portfolio is Canadian stocks. So I certainly cover those. Absolutely. I don't care where, to be honest, I don't really care where the stocks are at. Australia, Canada. I mean, one of our best performing shorts recently was an Argentinian-based company. Um, yeah, so did I say you can use it on TC2000? Yes, you can. Yeah, it is available for TradingView as well. Do I record the Tuesday, Thursday sessions? Yes, we do. We send those. Yeah, we have probably only about 40% of people in this program can attend live, so we definitely record them. And so when you go into your membership portal, for example, just to show you, you'll be able to come in here and go into Trading Center, Trading Room Invitations. Okay, and this is where you'll be able to come and log into the trading room. And this is also where you can then go in and access the trading room recordings. Okay. So we've just uploaded, as you can see, Tuesday, Thursday night is just being uploaded now. Okay. Look, and it's so it's a fantastic deal. And after the month is up, you can continue on receiving those alerts if you'd like to. And continue on with your membership. You can, if you want the alerts only, it's only $59 a month. That's the text messages and those daily videos I was talking about. And if you want to continue on with the live lessons as well as having your own one-on-one coach, which is there for when you have questions, it's $147 a month. So at the end of the month, you figure out how much money you made, and then you can continue on with the alert service after your first welcome month, where you're getting everything. So it's and look, if there was ever a time to give us a try, maybe you've been seeing us around, maybe you've been to a bunch of our webinars. As you know, we never offer anything that's usually under $297. So we just feel that this is probably, now, if you're ever going to give us a go, now is the time. This is where we excel. This is our forte. This is our this is our expertise. When markets turn, when we capture the tops and the bottoms, and we plug in the very, very, very strongest buying and selling to pull out the juiciest stuff. And as I've shown you today, I've got a number of open positions with a fair size amount of cash in both. This is stuff I believe in. So if I'm willing to put my money where my mouth is, I hope you'll give us enough confidence to put $97 at risk. You can lose that in a heartbeat by chasing the wrong opportunities, and certainly by missing the right opportunities. So again, it's not much to risk, and I can promise you this will be something worth doing. And we obviously are hoping to earn your business. So this is where we get to shine. Do we have a number you can call? We do. Yes. One moment. Okay, there's a couple of questions on UVXY and things like that. Sure. Just give me 1 second. There you go. There's the number. Is Dave still doing the teaching? Dave has never been a coach. Dave's been with us for a long time. He's still with us. I do the teaching, as well as Greg and Sean. That's the three of us in the coaching department. And then we have Greg, Kyle, Ward. Who else am I forgetting? Send him an email. Oh, well, just shoot it through to info@Acorn Wealth. Dave has been away for the last 2 days. He's been in hospital or had some issues, but he'll get back to you. But otherwise, for a more immediate response, just shoot us an email because he might be out tomorrow as well. Is this $97 for the first month? What if I can't learn everything in the 1 month? Well, over this 1 month, you're going to be having 8 hours of live sessions. You will have 2 weekly videos, which is highlighting our favorite stock setups. You'll have access to those videos and recordings over the next month for life. And if you want to continue learning more, which I would assume is because it's worth it, then you can continue on at $59 a month for just the on-demand videos, or $147 a month to continue with the twice weekly live sessions as well. Let's have a look. Is everything mostly penny stocks less than 10 bucks? I'd rather buy options because I have a fairly small account. Well, I love stocks that are only $5 because when they go to $30, if you have a small account and make 1,000% return, don't get sucked into options just because you have less money. The amount of people I've met that are worse off because they went to a webinar and bought an options course because they were sold on the idea that if you don't have enough money to trade, buy options because you'll make millions with it. It is so bad. That is such a terrible sales pitch. Options, if you're going to buy an option that can make you that much money, it's because there's that much risk. There's a reason why hedge funds don't buy out of the money calls that expire 3 months away or 2 months away. There's a reason why hedge funds managing $30 million, the people that do have money are not trading that way because it doesn't make money long term. Now, what options were created for was risk management, covered calls, buying puts against a long stock position as you go into earnings, things like that. They were never intended as a method to roll the dice and try and triple your account overnight. Sometimes it happens. I've done it, but I've never lost as much money in anything as I have in options. So people say, well, I've got a small account, then that's why I want to use options. Well, then find stocks that are, a dollar, that have the potential, that are not a penny pump and dump, some crap stock. Find a stock that's a dollar where you've got major institutions like Goldman Sachs putting $100 million into them, as well as their entire board of directors. Buy that with your small account and then put $1,000 in and cash it out for 10 6 months later. That's how you build accounts, real investments versus speculative and high risk roll the dice. Now, if you like options, that's fine. If you're going to do it properly, fantastic. Just don't gamble, because I hate to see it when people are blowing up accounts and never get back into trading because they got sold on the easy peasy option strategy idea. So make sure you do it right. Guys like Serge Berger teach it right. Todd Gordon, both friends of mine, awesome option teachers. There's a number of them out there that I work with that are really, really good at that stuff. But to answer your question, so that's just a little bit of my, I guess, a personal pet peeve. I hate to see people trading options just because they have a little money. If you have a little money, it means you need to be especially selective for which stocks you choose, right? Choose the right ones where you don't have to trade them every day, and pick a few high quality setups and let them run. That's what I do, whether it's with 10 grand or 100 grand or whatever. If you do want larger stocks, yes, we certainly do have them. I mean, LGCY as an oil play. I mean, FLDM is another one. Well, these are both under $10 so far. Excuse me. Hain, HAIN, $29. Just waiting for this one to break out, but as you can see, this is a fallen angel, $30 to $40, which could go all the way up to 60. Goodyear Tire, another one which was a recent setup, down here at $21. Again, downward channel, drop below. So no, we don't specifically look for just under $10. And if you are someone who knows how to trade options and you're good at it, you're probably selling options, I'm guessing, because that is how you make a lot of money, if you do it right. But yes, we cover the full spectrum. The only reason I personally don't like options is because I don't want to have to look at my account during the day. I travel a lot, that's why I started learning to trade. I wanted to, we just spent the last 3 months traveling overseas, and earlier this year we were living in Colombia. Sometimes we had no internet for two or 3 days. So I don't want to have to worry about being there to sell or buy a position. I want to put it on autopilot. I want to say buy here. If it goes to there, sell half. If it goes to there, sell half. And if it pulls back to here, protect my capital and get me out. So the moment I pull the trigger, when I get into a stock, I never have to worry about it because I always know what I put at risk, and I always know what my reward is, and so I know the outcomes. Unless it has a massive gap down, which is very, very rare, then I know what's going on, and it fits my business plan. So with options, you don't get that kind of level of security. It's too much stress, and in my opinion, it's unnecessary stress. If you want to make more money, use margin. You don't need options. Anyway, just personal. I don't want to. I know a lot of you trade options. As long as you're doing it well, fantastic. And if you're not doing it well and all you're missing is the right movement in the stock, fantastic. We can do that for you. Just be careful with how you manage your risk. Would you recommend this package for someone who would like to trade a small portfolio? Absolutely. In fact, when I started trading like this, it was when I was 18 years old with 10 grand that I borrowed from my dad. And that's why I focused on high quality, not quantity of stocks. If you have a small portfolio, what do you need? You don't want to be trading every day because you're going to get eaten up by brokerage fees. So you want less trades, higher quality trades, which maybe everyone wants. But the focus of this strategy is to find the best with the highest probability of going up the most with the least amount of risk, right? So what else would a small portfolio need? Less transaction fees, longer runs, more profitability with less risk. So absolutely, and that's why it's priced that way. Something that everyone can afford. Oh, sorry, I did take the link off the screen. I apologize. Sorry. Oops. Let me put it up in the chat box. Let me get back to that screen. Sorry. There you go. www.acornwealthcorp.com/now. Now, oops, sorry. Now, I did just publish a new list for today of our 6 favorite setups between now and the end of the month. There was a ton of research that went into this. We touched on one of them, actually, I think SSKX or whatever it's called. So there's 6 new trade setups we just published. So anyone enrolling tonight will receive those. That is the quickest way to start. Obviously, we'd love to see nothing better than for you to be able to start making money as soon as possible. So jump in, and we'll make sure we get that before the end of the business today. Let's have a quick look. You basically day trade and swing trade options on high dollar stocks such as Amazon, Google. Well, look, if it works for you, keep doing it. But the problem the thing that I would have difficulty with is that, are you trading the highest probability pattern? I mean, let me show you. I mean, so GDEN is a great example of a perfect short, where it double topped at $35. I mean, that's maybe a lower volume stock. 2 cows might be better. TCX was another short that we suggested. Huge insider selling, perfect pattern, upward channel, breaking down, market going up, this going down, and that dropped from $61 down to our target at 53. That was an option setup we suggested. So if we're looking at shorting big cap stocks, 100% options are the way to go, because see, if I'm thinking about longs. See, in a long only environment, I can buy at 1, it can go to 100, I can make 10,000%, right? But shorting a stock, it can only drop 100%. So when I'm shorting things, that's when I buy options. That's when I buy puts, because I'm trying to. I don't want my returns to be limited to 100%. So on something like TCX, two cows, we suggested looking at a put. Something like Tesla, we haven't touched that in a while, but that was originally an amazing short. Head and Shoulders, back in February, we suggested a drop from 330 down to the support at 270. That was a put idea. Question, what are my thoughts on AVEO? So I guess my question is, the only reason I don't trade options is because I'm not an options expert. But if you would benefit from getting ideas where we find a large cap stock that's about to drop 20%, and we say, hey, here from 300 down to 270, and we feel this is imminent, here's all the reasons why, here's the insider research. If you know how to best trade the option on that, then this is perfect for you. But if you're looking for someone that's going to consistently tell you what the best option trade on that would be, we're probably not your guy. But if you don't know how to trade options, why are you trading them in the first place, would be my I guess, more important question. AVEO, I like it. I like it. Looks good. It's not probably my ideal scenario because the pattern's too choppy, but I'd speculate on it. But I just think there's better ones out there. Huge buying yesterday. Okay, let's have a look a little bit further out. Oh, so there's your longer term. Yeah, no, I like that. Yep, I'd give that a go. I'm pretty sure this is on a watch list somewhere of mine. No, it is now. AVEO. Yep, I like that. I'd give it a run. Personal thoughts. 18 months ago, you suggested a stock at $5. I was stopped out, but 10 days later, it got bought out for $40 overnight. Great call. It's a shame you got stopped out of it, Martin. Be interested to know if you remember what the stock symbol was. Yeah, crazy how insider buying was just happening right before that, right? With a small account, how would you recommend distributing these funds? Well, but when I started out, I basically wanted to split my capital amongst 5 stocks. So if I had 5 grand or 10 grand or 20 grand, I would be in no less than 4 and no more than 8. And the way that I did it personally was I just had even dollar amounts. So if I had 5 grand, it was $1,250 in each. And have a stop loss risk reward of at least 3 to 1. And if good trade ideas came along that didn't meet that parameter, didn't matter, move on to the next one. And as long as you stop being so impatient and let good trades come to you, especially when you have a small account where the focus is quality, not quantity, just be patient, stick to your rules. That's what I did. So I mean, I can't recommend how you should manage your money. We're not a financial advisor. We're not licensed to suggest that. But that's kind of how I followed it. So you just need to determine what's right for you, and maybe that's an idea to look at. Has NAC broken its downtrend line? That's Northern Dynasties, right? Yeah. I've been asked about this a few times. No, it hasn't. Now, NAK is a momentum stock, not an oscillating stock. So it really needs for the 20. Yeah, it's pretty close. It's pretty damn close for being ready. Yeah. You know what? Yeah, if it breaks today's high, it's probably ready. If it breaks to yesterday's high, yeah, like I mean, if you like this stock, divergent money flow, yeah, no, it looks good. You tried to sign up, filled out the form, and got a page that said "form not found." That is odd. Um, has anyone else had that problem? No? Okay. It looks like a bunch of people haven't had that problem, Bob. So let me just quickly, just if you can type your last name into the chat box, I'll just quickly check to make sure that your order went through. But yeah, there's a lot of people that didn't have the problem, and a couple people that have had the problem. I don't know why. That's strange. I mean, it does look like the orders are here. Um, just check your email, Bob. You should have a confirmation that will have come through. Yeah, so there's a bunch of people that did work for. Okay, I don't know. That must be maybe it's a browser issue. We'll check into it, but that sounds like a redirect problem. I used to be a techie, so before I worked in a video shop, I used to pull computers apart and redesign them and overclock them and do all this kind of nerdy stuff. You know, Back to the Future kind of days. But so no, I know a little bit about technology, and it does sound like a software issue, but it might be on our end. I don't know, but we'll look into that. But it does look, Bob. I just looked your email up. It did go through, so you're all good. Just sounds like the thank you page has a problem. So my apologies. Yep, and I'll be sending that stock report out here in about 15, 20 minutes, just to give everyone time to register. So I'll make sure everyone who has registered this evening does get that. So strange. Yeah, I just actually put the order through myself on my own credit card and it worked. And I'm on the thank you page. So yeah, I can't see what the problem is. We'll have a look into that, but thank you for bringing it to our attention. All right. Any other questions, guys and girls? It worked for you too, Susan? All right, good. Yeah. I'm not sure why it's not working for some people then. Again, we'll look into it. Insider buys interpreted differently than insider sells. Example, TRXC. Um, well, let me look at what you're talking about again. TRXC. Yeah. Oh, sorry. I guess the answer is yes. Insider sells are interpreted differently. Insider sells certainly were a warning signal when it first rallied, but I'm trying to look at where the big sell happened. Anyway, on TRXC, no, insider sells are different because people sell for a ton of reasons. People sell because they made a lot of money and they don't know what they're doing. They don't know how to read a chart. They know how to buy value because they know that company is doing really, really well. But all of a sudden they turn 10 grand into $1 million, or they turn 10 grand into 100,000, or whatever the case might be, and they get excited and say, well, I'm going to take a little bit of that off, or my wife's going to kill me, or my husband's going to kill me. People sell because they have tax problems. People sell because they've got debts that finally they've been working for this company for 30 grand a year. Finally, it's made some money. I need to pay some bills off. There's many reasons why people sell. There is only one reason why people buy. So when I scan for my shorts, there's a whole ton of filters that I go into. their cash flow, their debt, their equity, the history, the track record of the insider themselves, what other companies they're involved with, what's the track record of the companies that they've previously been a board of directors with, what percentage of their stock is shorted. I go into, when you get these reports, this is after hours and hours and hours of research, because when I find the best stocks in my scan, I go down to that level. I look at the director's LinkedIn profile, see how well connected he is and how well respected the other people he knows are. Like, I mean, we really put some time into making sure that our ideas have as much edge as possible. Now, we don't normally do that, but for the last 6 months in these market conditions, you need it. You don't just want to buy any kind of Joe Schlum stock that comes off a newsletter. You want the best. And if this market turns, you do not want to miss getting in at the top, because when everything's running away on you, that's when you're going to say, crap, I missed the top. I should have been. Am I chasing it? Should I wait? If I wait, am I going to miss more? Don't put yourself in that emotional, horrible position. And I'm sure you all have good ideas already. I'm sure you're well educated, but I'd love the opportunity to show you what we've got going on, because it's pretty cool stuff. Is it in US? Yes, it is. Of course. Okay. Any other questions? Let's have a look here. Sorry. Let's have a quick look. I'm just going into my. I'll just check for you, Martin. Make sure Martin V. Is that it? Yes, we did receive your order. That's no problem. You're all good to go. And yes, you will receive your login information and everything you need tonight. All right, Martin. Yep, we got you. Welcome on board, mate. All right. Well, look, we will tie things up there for the evening. I will leave you with a video for those of you that would like to watch. I won't force you to if you don't want to, but the link is acornwealthcorp.com/now. And what I'll leave you with is a little video we actually asked some of our students to record, talking about what it's like following our alerts and working with us. So again, the link is acornwealthcorp.com/now. Again, I'd love you to join us. You can spend $97 on a lot of things. It's a waste of money. This will not be one of them. And so here's a few comments from some of our students that we'll leave you with.